everyone, John Renner here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 27th of the month, rounding out the month, almost done. We've only got one more day after tomorrow. Pretty good overall movement coming back. We had a couple delays in terms of news with Draghi being pushed off a little bit, and the markets did seem to be a little bit kind of sleepy coming in off of the weekend, but for the most part, can't really complain. We had some pretty good movement, plenty of opportunities today, as long as you stuck around and kind of had a little bit more patience than maybe normal that we're used to from these volatile markets. But before we jump into the charts, as always, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From here, you'll be able to sign up for email newsletter lists, so you'll be notified every time one of these videos comes out. And along with that, in the email itself, we go over all kinds of things we just don't have time to talk about in the video, whether it's stocks, crypto, anything of interest that's going on for potential setups or just of interest. Make sure to sign up for that so you don't miss any of those in the newsletter. Of course, along with that, if you haven't done so already, make sure to click on the free 3-day trial. That's in the live Trader Room subscription and trial info, where you can sign up for that and just kind of hang out with us for a couple days. It's a great way to get your feet wet, kind of see how we approach the markets, how we trade, and just how everything goes throughout the day. Whether it's fast, slow, or in between, you'll be able to kind of see how everything works and ask questions and all that kind of fun stuff as well. So make sure to sign up for that if you haven't done that already. Now, starting off on the euro. Yeah, man, the euro pretty range bound, not really a whole lot going on. In the more recent price action here over, I mean, keep in mind, each one of these are 4-hour bars. Nothing's really happening. We're getting a little bit of a bull lift, and then it pulls back some, and then we keep getting stuck around the 200 period moving average. Tries to go back up, dips above a previous swing high, traps, turns back around, goes back down to the lows, traps below the previous lows. It's just a mess right now in the euro. There's a lot of waiting going on, and it seems like a lot of people are probably positioning themselves. The last time we saw a similar movement to this was over here, and you can see that we did end up getting a strong breakout attempt, a pullback that led into a higher low, and then a good bull rally for the next several days towards the upside. That doesn't look like we're in that situation yet, but we have had a strong bull breakout attempt, a higher low, and now we're starting to turn back up again. These could be clues that we're gearing up for a bullish breakout. Now, obviously, a couple things in the way of that. If we look at the wedge bottom to the next low, that is what we're getting stuck on right now. So as long as that remains in the way, we could be definitely in for a little bit of trouble. Now, if we take that low and we put it over to the next bottom over here, we can see that they are, obviously, at least some traders watching this area as support for buying there too. So we're kind of stuck between two wedges. We have a new wedge that's potentially forming, and then we have the old wedge, which is kind of sticking price to where it is. That, along with the fact that we have major horizontal support and resistance coming through here, that's at 23,675. We held it as a high, as a low, as a low, as a low and a high, as several highs inside of here. Lots of stuff in the way right now for the buyers, and that's probably where some of this chop and slop is coming from. I think in order for the buyers to really take over, we're going to need to break above not only that horizontal level, but also back inside the wedge for a little more continuation up. We have a pretty much flat top on the highs here, and that could mean that when they come back, a lot of traders may be looking for earlier areas to kind of front run, get ahead of all the traders for profit taking. That may mean that we have some buying resistance, or selling resistance rather, near the highs of around 25,465 or so, with traders trying to exit a little bit early to try to get those profit targets. For right now, though, we're in a range, and we're stuck between a rock and a hard place and then another rock on top of that with a horizontal support and resistance. We're just going to have to kind of sit back and wait and trade it like a range. Buy low, sell high, knowing that the emphasis is likely on buying low. We're probably going to have a better time, or at least a little bit of an easier time, trying to buy low on the euro at the moment. Over on gold, gold holding that buy zone, that strong multiple confluence area of interest that held it really, really well. We had a great push off of it, a higher low, and another bullish run for continuation. Haven't quite made it up to that 1345 area yet, but we are forming a new wedge low. The earlier wedge low here doesn't fit very well anymore, so we can mark that up. And we'll get the other one down there as well. And that all looks pretty good. We have a little bit of a wedge. This was technically a lower high, barely. And now we're starting to see more wedge-type formations and even wider wedge bottoms coming in here. They're so flat that I can barely draw the line on it. We're looking like one of two situations. Either this is a big bear spike down and this is a bear flag, and we're going to go see this flying back lower again. If that is the case, we have a lot of support that the market's going to have to break through. Horizontal support at 27.5 and now rising new wedge support below that, right around that same place. So there's a lot of support if the sellers are going to take gold lower, but that is one scenario. This could just be leg one into a bear flag and then leg two for a collapse back lower. And if that is the case, we're probably looking for that rising shallow wedge bottom instead as major support. Now, that said, we do also have the situation where we have put in enough of a high that this could be a more aggressive wedge top coming down, something like this, where, well, we might have that to work with on the upside. That creates a situation very similar to the euro, where if we go up, there's resistance. If we go down, there's support. The market doesn't have room to really move around and shift. It just gets stuck. And with that type of influence, well, we're probably going to have a lot of range-bound choppy movement. We have had a halfway decent bullish breakout attempt here, trying to break above that previous major swing high, and now we're pulling back to the interim swing high and holding above it pretty well so far. But again, if we go up, there's resistance in the way. If it goes farther down, there's support in the way. I think we just have to treat this as a range for now, with an emphasis on the upside. You know, buying low and selling high, but with an emphasis on selling or buying low if we can get a dip low. And if we can get a dip back down below this previous swing, that might be all of this flag kind of coming to fruition, right? We have a lot of sellers that are trying to gear into this for a sell flag down, and, well, they might just be all taking profit at the lows. It looks like a pretty big failure the last time we were here, and the last time they were here, and the last time they were here. You're kind of getting the idea. Not only do we have horizontal support here, but it looks like it's more of a zone that kind of comes through this entire area. So even if it does go lower, I have to assume there's just going to be buyers underneath, so I do have a slight buy-side edge. So rather buy as cheap as possible, though. And then over on crude oil, we have a good bull lift to the upside, breaking through the 61.8 and pretty much kind of the last-ditch effort from the sellers. They held the 50% for a little while and then broke back above, and now we're getting more of a wedge-type formation higher. Earlier levels of support or resistance, had a very nice hold on the top there, tried getting the cycle down, and it broke back up again. So that level is now kind of null and void for resistance. We can now use it as support if it fits. Next area above that's at 64.91, and if we look at this from more of a structural standpoint, we can see that the potential of a rising channel low fits really well. If we put this on the highs as a full-fledged channel, it fits okay, right? It fits better over here than it does here. We've missed it, they've missed it, we're missing it again. That gives us a clue that we might also be dealing with a slight wedge. Although it does fit really well earlier on the channel, and it's not something we want to ignore, we could be kind of rounding out the top a little bit for maybe a wedge. Now, we don't really have enough info yet, but, you know, it could be something like this, just to give kind of an idea. Overall, everything is still looking pretty strong to the upside. We're getting a little bit of a wedge or at least a weak channel. And weak channels gives a pretty big clue. They missed the highs 3 times, really. We missed it back here, and back here. Whenever we consistently are missing a channel high like that, the buyers are running out of steam. The buyers are trying to catch the rally up, and it fails. They try to get it again, and that fails as well. Now, fails in the sense of getting to the channel highs. It didn't fail in the sense of actually having some pretty good movement, but failing structurally. Right? And whenever we have a structural failure like that, that generally leads us to believe that when there is a pullback, it's likely going to be deeper than a lot of traders anticipate because they're going to overcorrect. They missed it here, they missed it here, they missed it here. They're probably going to overdo it down here to try to get some better prices. It's kind of what it looks like at the moment. So although crude oil is bullish right now and buyers are buying for pretty much every reason they can get their hands on, and we're probably going to see some overnight session bullishness as well, if not a little bit sideways. By the time we do start getting that pullback, we have to gear up and think, well, this might go a little bit further than we think on that pullback side, so maybe don't get too aggressive on the buy side when it starts pulling back. But overnight session, I'm looking for a little more bullishness to continue, or at the very least go sideways to up. And then over on the S&P pushing up towards the highs of the 3-push wedge. We have 1, 2, and now 3, and we are in that area right now. Now, obviously, this is a very, very strong bull rally to the upside. This is certainly no joke. And likely with this amount of aggression, even though we are testing an area of resistance, we're probably going to find the buyers buying any type of dip that forms to try to get another high anyway. So the overall formation really looks like a 3-push wedge top is setting in. I mean, it fits really well. But we do also have to believe that, well, we might be dealing with a slight wedge bottom coming up as well, and that does fit. I mean, we can see they held the bottom here, they retested it perfectly there, retested perfectly there, and even though they're not very big candles and they're small little wicks, it does show support in that very similar area, all on that possible rising wedge. So we are getting a little bit of a wedge and a strong bull move. Again, with the amount of strength that's in this, every pullback so far has been aggressively bought. We had an aggressive pullback here on that singular bear bar, and that was immediately eaten up by the buyers and slammed higher. And we also have a dip below the previous candle's low where the buyers hit it so hard, it ended up as a bullish engulfing candle on the 4-hour chart. So there's obviously a lot of buyers that are interested in a dip, and if we can get any kind of pullback, whether it's, you know, another dip below a previous swing low or maybe a retest of a previous swing high, very likely buyers are going to continue buying, trying to get another leg up, just given the amount of aggression here. We are likely getting a little bit overdone, but I don't want to say that the top is in yet, or at least in this move, because of the aggression to the upside. It makes a lot more sense to see buyers buying into a dip for another, at least a little bit further upward movement. So that leads me to the overnight session, looking for any kind of pullback that we can get. At the moment, a pullback to 27.53 to 54 would be a really nice area, and if it wants to dip to like 27.48, it would be even better. Now, that is pretty far away from current price. We're talking a 40-point drop there. I don't think it's going to happen, tonight, but any type of pullback that we see in the faster time frame, maybe if you're trading off of a 15-minute chart or maybe a 5-minute chart or whatever your preference is, any of these shallower dips, whether it's swing low traps, swing high retests, or maybe just a channel. It makes a lot of sense to look for some buying pressure off of those lows for a continuation towards the upside. So that's going to do it for the outlook. Now, in terms of the news for tomorrow, we do actually have a couple things that we can keep our eyes on. Tomorrow at 8:30 in the morning, we have two news announcements. The first one is the core durable goods orders for January, forecasted at 0.4%. And then also at 8:30, we have Fed Chair Powell testifying. That can definitely move the markets quite a bit. So we got to be careful tomorrow morning at 8:30. We might have a little bit of shake, rattle, and roll going on there in the early morning session. Then at 10 o'clock, we have the CB Consumer Confidence for February coming out for the U.S. as well, forecasted at 126.2. And that's it. We don't have any early morning European news. Well, big news at least. We don't have any evening news. We don't really have anything else going on. So a lot of waiting until tomorrow morning and, later morning. 8:30 and 10 o'clock are the only news announcements that we have to worry about tomorrow. Kind of nice that we don't have to worry about too much. But hopefully there is enough to keep the markets moving going through the overnight and into tomorrow. So that's going to do it for this one. Like we always say, it doesn't matter what market you're approaching or trading. Make sure to always, always, always make a plan, trade the plan, follow those rules, and you'll be A-okay. Until the next time, we'll see y'all then.